You're listening to the Wealth Mindset Show, where Hicks and Zerker Capital Management's team of finance professionals, portfolio managers, and a life coach come together to tackle complex topics in finance and retirement planning so you don't have to. From investment strategies and wealth management to tax planning, retirement income, and aligning your money with your values and purpose, the Wealth Mindset Show offers the tools to thrive.
All right. Hey. Welcome to the Wealth Mindset Show, where the Hicks and Zerker team will have conversations on managing wealth, navigating retirement, and making smart decisions for a secure, meaningful future. I'm Austin Wilson, Chief Investment Officer at Hicks and Zerker Capital Management.
I'm Josh Robb, Director of Wealth Management at Hicks and Zerker Capital Management. And joining us today is Jordan Shaw, one of our advisors here at Hicks and Zerker Capital Management. And we are going to be talking about the trade-offs between spending now and saving for the future, and mostly focusing on vacations now versus future spending on those type of events and activities.
Spoiler alert, Josh is going to say it depends at some point.
It does depend.
But we'll get to that.
When we get to this podcast.
It's late spring. We're getting there. Weather's warming up. What's going on with your families?
Well, we are in the middle of baseball and softball season. Starting of the year, it's been very cold and wet and rainy, which is normal spring weather for Ohio.
True.
So, you go from one day having shorts and a T-shirt to a winter coat on, and, it's all over the place. But spent a lot of time out on ball fields.
Yeah. Jordan?
Outside, going on walks, bike rides, anything you can do to get kids outside with the warmer weather.
Yeah.
That's where you'll find us.
Yep. Same here. Kids are loving swinging outside on the swing set. A lot. Falling off of things on the swing set. Some.
Mm-hmm.
We're doing Miracle League baseball. Our oldest one is in the Miracle League. She plays for the Cubs. Stud. She just is straight up on the base every time, hits the ball every time. She's great.
Yep.
So
we have a great announcer there too.
We have a great announcer there, and his daughter plays on our team as well, I believe. Super fun. We love the Miracle League. But Miracle League baseball on Saturdays, and we're just enjoying being outside like Jordan. We see the Shaws out quite a bit.
Are you there this weekend?
Yeah, tomorrow.
What time?
Noon.
Okay.
So we'll be there tomorrow.
All right.
Go see the Cubs. But yes, as Josh pointed out, it's summer. It's going to be summer here. So group chats are blowing up, talking about what beach trip we take in. I found a cabin deal in Montana. Ooh, I could go to Europe for $10,000. The question is, you might also be comparing that to, my retirement app, markets are at all-time highs. Or wait, a couple months ago, markets were down 10%. Your retirement app staring at you. What's the right move? Do you start plowing more money into retirement? Do you spend the money now? Take the vacation? The question is that we're going to be answering, which one's right? And again, we said it's going to really depend. But, one thing that's interesting is that statistically speaking, the summer is heavy spending season.
Yeah.
So specifically here in the United States, our vacation time is generally concentrated because a lot of the country's peak weather time is summer and no school time and all that stuff concentrated in the summer. About half of Americans, 52%, tend to overspend in the summertime. And that could be called things like funflation, right?
Yeah, there you go.
It's true. But the question is, what is behind our thoughts behind all of these free-for-all spending habits? And then I guess a lot of it could just go down to mindset, right? A lot of people think, oh my goodness, I need to make the most of this summer. 2/3 of Americans say that they'd like to do that, but what that does is it causes their spending to go through the roof. And then there's just activities in the summer that cost a lot more. There's a lot of FOMO going on. So that's kind of what we're going to be talking about today is this a good thing for one? And is it something that you need to be balancing in your overall financial picture, along with, of course, being responsible as well?
Yeah.
So the question is, you can either enjoy life now or retire well later. But the question is a little bit more nuanced than that. It's a little bit more, we need to be able to balance this because financial planning is all about balance. So Josh, talk a little bit about that balance.
Yeah. So really what it boils down to, and this is a picture of a lot of the financial planning that we do, in that you are balancing a short-term need or goal or desire versus a long-term goal, need, or desire. And you don't have enough money always to go around to fully fill all those things up. And so you're balancing between current spending and future needs.
Yep.
And the hardest part about this whole thing is that future need is an unknown, in that what will I feel like health-wise? What will I be able to do? What will my situation be?
Yeah, how long am I going to live?
All those things, there's a lot of unknowns factored into that. So sometimes it's easier to default to I know I'll enjoy it now. might as well do it. You mentioned the fear of missing out. Well, what if I don't ever get this opportunity again? So it is a balancing act. And one of the things we do as advisors is we help you at least understand the trade-offs, because it's always a trade-off. And that's something we talk about all the time as advisors is there's not necessarily always a clear right and wrong answer, but there is a trade-off between those two choices, and you need to understand it before you make that decision.
Right. So, Jordan, talk a little bit about a couple questions you should ask yourself when you're, discussing maybe spending on a vacation versus looking at your long-term plan.
Yeah, so there's kind of two different categories that people are going to fall into that are asking these questions. One is we're not retired yet. So it's truly a matter of, maybe you're a young family, and do I take a vacation, make more memories with my young family, and put a pause on or reduce or whatever it looks like your savings for retirement, versus someone who is in the other category who's already retired, and it looks more like, can I afford to do this? Does it work well with my retirement plan?
Mm-hmm.
So, and that's one of those questions, is having that plan, looking ahead and saying, if you're a young family and you're trying to save and save and save for retirement, you're going to regret not taking those trips if all you do is save for retirement.
Right.
But there's a way to build that into your budget and say, okay, maybe I'm just taking 1 month off of retirement saving, or I've already given myself plenty of heads up. We've known we were taking that Europe trip for 3 years, and we've been saving for it. So asking yourself if it aligns with your goals that you currently have. You don't only need a long-term plan. You also need a short and a midterm plan to make sure that your life is being fulfilling.
And that's the thing, is when you're retirement planning, I mean, it's down the road, 20, 30, 40 years. And if you don't have little short-term goals along the way and celebrate progress, you're going to get burned out and have a hard time reaching those goals. So yeah, you do have to kind of balance that out. And, kind of those questions about, you mentioned it, if it's a bigger trip too, is this spur of the moment? Did I just come up with this, or is it something I've been wanting and planning on doing? Right. So, and my wife and I, we had wanted to go on an Alaskan cruise. We were going to do it at our 15-year anniversary. COVID happened. We didn't take the trip, but we had been talking about that for a while. Then we had another 5 years to talk and plan for, and we ended up doing it on our 20-year anniversary. It wasn't a last-minute decision. We had been talking and planning about that and saving for it along the way. So that's one thing, is because, again, it may not even derail your long-term plans if you can do it side by side. But even if you have to make some adjustments temporarily, it may be worth it still.
I think that if you do impulse-driven spending for a vacation, that's a very, very dangerous spot to be in, right? Because
then you're paying catch up.
You're playing catch up. You didn't plan for it. You didn't put money aside for it. A lot of people, what they end up doing is falling on poor funding methods.
Yeah.
Also known as credit card debt, right? If almost anyone can go to Europe for 3 weeks and drop $15,000 because their credit limit will probably allow it. But how are you going to pay for that once it's actually due? Not a great idea. So funding it is obviously, so plan for it, plan ahead. Can you pay for it without stressing out the rest of your plans, really the answer? Or are you just going to say, YOLO, I'm going to figure it out later?
Yeah, who cares?
Don't YOLO, people. That's usually how people end up paying 30% in interest.
Mm-hmm.
So was your $10,000 trip to Europe really worth, after you pay it off, $20,000, $30,000? Probably not. Another thing is just, what are you using this for, right? Are we trying to be really intentional about planning for this and what it's going to mean to us, right? That would be, are we creating memories with our kids like Jordan talked about? Are we creating memories with our spouse like Josh and Steph did? Are we using this just for a break that we've been planning for? These things are really important. One thing that we all know, and we all have kids, right, is your kids are only home permanently for a short period of time relative to their life, right? About 18 years or so.
Yep.
And so you got about 18 summers, and there's a handful at the beginning that's like probably not going to be doing a lot of traveling.
Won't remember
or they won't remember it.
Yep.
And there's a handful at the end where they're probably going to be too busy. So there's the window's actually smaller than you think. So make some memories while you can. That's worth investing in a lot of ways if you do it the right way. Those memories can actually matter more than the dollars. Or same things with you and your spouse. There's a great period in your life where you need to go make memories while you can, because maybe when you get a little bit older, it'll be a little bit harder to do that. You won't have the energy or the availability to do that. Or if your kid situation is challenging, you might not have the availability to do that there. So if you've got the time, you've got the money, it might be worth it.
Yep.
Have you ever thought about how your financial choices reflect what truly matters to you? At Hicks & Zerker Capital Management, we believe that integrating your values and dreams with your financial future is key to achieving peace of mind and confidence. When you engage in deep conversations with us, you'll start to see how your money can support the things that matter most in your life. You'll have a dedicated team of professionals tailored to your unique needs, all focused on crafting an investment portfolio designed to help you achieve your specific goals. Plus, our on-staff retirement life coach offers guidance to empower you toward a fulfilling retirement that goes beyond just financial security. Ready to transform your relationship with money? Join us at hzcapital.com and let's embark on this journey together. Now, back to the show.
Yeah, and this is definitely something for someone who is not retired yet, who is looking at these sorts of things as an expense coming up that I have to look at the budget or the cash flow or whatever throughout the year. And this exact instance is where, or one of the reasons why I think it's important to build intentionally into your budget, if you have one, or just understanding what your cash flow situation is like, some margin that is not accounted for. Just say, this is extra savings. I'm not putting it into a retirement account that I can't touch for 20 years. I'm not putting it towards known bills that I have to pay. I'm just saying this is extra savings outside of anything, because you might come across that family vacation and you have an opportunity. It's only 3 months away and you don't normally have 3 months worth, or that's not enough time to save for it perhaps, but you've got this extra slush fund. It's not an emergency fund. It's literally extra savings. And I love it for stuff like this because it gives you some freedom to say, you know what, if that happens, I don't have to change my retirement savings, contributions, whatever at all. I've got this extra put away. I understand not everyone can do that, but if you can, or if you're someone who, like me, kind of likes to have every single dollar have in a certain place, maybe it's okay to have this isn't assigned to anything to allow for this flexibility.
And that's the key, is if you can plan ahead, you can, in a sense, budget for a trip, vacation, those type of things. That's the preferred way to do it, like you said, Jordan. And then if you're maybe a little bit tighter on money, it's the trade-off of saying, okay, if I reduce maybe a little bit of my long-term savings and I bring my savings rate down to free up some of that cash, what am I trading off? Oh, I may have to work 2 more years longer in my career if I'm willing to then be able to take some vacations periodically along the way. If you're comfortable with that trade-off, that's not a bad decision. Again, it's not like there's right and wrong. It's just, am I willing to accept the difference between doing this versus doing that? And so if you say, you know what, I'm willing to sacrifice a couple more years of working so that I can every couple of years take a vacation with our family, that's a perfect trade-off if you understand and are willing to do that.
And I've actually seen clients do that and do it well. So many clients that we've met with, Josh, are not, I'd say the majority of them, they don't come up to their retirement date and say, oh yeah, I can't wait to be done. Most of them, I can't wait to be done. But there's a level of, I'm willing to work a little bit longer if it means making those additional memories possible a few years ahead or throughout retirement. That is definitely something that has helped kind of focus in my own perspective on all of this. Like working an extra year or two can have a dramatic impact on your portfolio, and it's maybe a small price to pay for those memories.
I mean, I guess the key question when you're looking at this from a financial perspective is, does it break my financial plan for me to take this trip? And if the answer is no, and hopefully you've planned for it, put some money away, go for the trip. Enjoy yourself, because we're going to talk about some reasons why. But the answer is yes, probably not a great time to take the trip. We probably need to plan ahead for the next trip. Maybe that's another year or two, right? You can, just like delaying retirement, you delay the trip and you can still take it. Just plan ahead for it, right? So let's talk about some instances where taking the vacation is the right answer. And then we're going to turn the page over and say, well, whoa, maybe when waiting might be the smarter choice. So when is taking the vacation smart? Life milestones, right? One of those is kids growing up. Like I mentioned, you have a finite amount of years to have those trips with your kids. A lot of those could be reconnecting with family that's out of town. A lot of those could be special trips, anniversaries, like Josh talked about. So these life milestones, if you have financially prepared for it, great opportunities to take the trip. So take the trip. You probably won't regret it again. Other ones, opportunities that won't come up again. Maybe there's a great organized trip with another group of friends and it's just well planned out and everyone's been thinking about it. That maybe that entire group going on the same trip for the same week isn't going to be able to happen again, or your family or whatever. Go for the trip if you financially prepared for it. one thing that we've seen is with clients and friends and all this is tomorrow is not a guarantee.
Right.
This is why the answer is not simply sock the money away.
Mm-hmm.
Sock the money away is the mathematical answer.
Yes.
But the
It's weird, financial advisors is saying, spend the money now. But the truth is, most people that we work with are going to end up with more money than they had planned for. That's just how it happens for people who have a good plan and stick with it.
Yep.
And so there is some cushion built in. And then the other thing, like you said, is there just isn't enough guarantee for the future to completely sacrifice all of the short-term things that you want to do.
Yeah, we know people where spouses have died young. They've had issues with their kids, or kids sometimes aren't at home and they didn't take as many trips as they could. And there's a lot of reasons why that could be, but tomorrow just isn't promised. So if you can, it's really healthy to take some trips. Enjoy yourself, enjoy your family, enjoy your loved ones. So those are reasons why taking the vacation might be the right choice. There are reasons why it would not be the right choice. And this is where your financial numbers are going to start kicking in. One of those is if you have, like we mentioned, if you have to go into debt for it, high interest debt particularly, not a good idea. Like that trip.
Or if you have high interest debt.
Period. Yeah, that's a good point.
Pay that off because it's really hurting your long-term success before you start then incurring some of those other costs.
Yeah. Or if you just don't have a plan and you haven't thought about these things, maybe you're looking at things impulsively. You're not planning far ahead. You don't know if you're on track to meet your financial goals. Probably not good to go on that trip and pay for it until you have all of that figured out.
Yeah, and definitely don't borrow from your emergency fund to go on that trip because that's there to protect you.
Absolutely.
It's not there for vacation.
And of course, there's just often times where there's competing priorities, right? Especially when you're a young family, I feel like. Having babies is expensive. Raising little ones is busy. That's a competing priority. Maybe just wait a little bit. It might be a little easier. It might free up some cushion in the future. Buying a home. Has anyone tried to buy a home? Interest rates are high and home prices are high. So your down payment requirement and saving up for that is a lot harder than it used to be. So that is a competing thing where you just need to choose which one's more important. If you want to buy a house, that's great. We hope you do. You need to be planning for that, and that can delay vacations, or vacation could delay the house. You're just going to be doing one or the other. And then just other major upcoming expenses could be weddings, could be other, whatever you need to do, college for your kids if you're helping out with that. Like these are things that could be a competing priority. So if you have competing priorities, it's not just so simple.
And I would also add to that something that's a little harder to quantify. This is the wealth mindset show, right? So there is a mentality and a behavioral piece to this where leading up to the vacation, if you just don't feel good about it, or you're not aligned with your spouse or whoever's going on a trip with you really about it, or you're just not settled about the financial aspect of it, that might be a yellow flag right there, or even a red flag that says maybe this is not the right time to be doing this. Plan it out a little bit better. Even if you call this number and you get a 50% discount on a trip, there's usually some strings attached to stuff like that. So let things kind of settle and make sure that you and whoever else is involved feels good about it and is looking forward to this trip to make it worth that extra $5,000 or $10,000 or whatever it's going to be.
That's good.
Any other thoughts on trip or retirement savings other than it depends?
It depends. But it really comes down to, you've heard it here many, many times. You will probably have a pretty good feel on what the impact will be. And if you're willing to accept that trade-off, it's probably worth taking that trip. If you're uncomfortable or saying, you know what, it just seems like a little bit more than I'm willing to compromise on, then it's probably worth waiting.
Yeah, absolutely. Well, that is, should you save for retirement or go on vacation? And the answer is both, maybe.
Yes.
Or
where are we going? Are we taking a vacation?
Yeah, we take a Wealth Mindset Show trip.
Yeah.
On the road.
On the road.
Well, I'm younger. I have to, raise little kids. So I'm kind of going on your dime. Is that all right?
Sorry.
We're good with that?
That's right. All right. Well, if you found value in this conversation, don't forget to subscribe to the Wealth Mindset Show on whatever podcast platform you're listening to. That way you don't miss any episodes. Also visit us at thewealthmindsetshow.com for more resources, or if you're ready to invest with Hicks and Zerker, head over to hzcapital.com. We would love for you to check us out. And then follow us on social media. We're pretty active on there, and we'd love to catch up with you and stay in touch with you there. Otherwise, we'll be in touch, and we'll talk next episode.
All right. Talk to you later.
Bye.
Thank you for joining us at the Wealth Mindset Show, where we tackle the complexities of finance and life planning to help you align your wealth with your values. We hope today's conversation provided value and clarity as you navigate your financial journey. Your hosts work for Hicks and Zerker Capital Management, and all opinions expressed by them or any podcast guest are solely their own and do not reflect the opinions of Hicks and Zerker Capital Management. This podcast is for informational purposes only and should not be relied upon for investment decisions. Clients of Hickson Zerker Capital Management may maintain positions in the securities discussed in this podcast. There is no guarantee that statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment, and any investor attempting to mimic index performance would incur fees and expenses that could reduce returns. Securities investing involves risks, including the potential loss of principal, and there is no assurance that any investment plan or strategy will be successful.